Is Australia creating the perfect property storm? With rate cuts on the horizon, global uncertainty, and a supply crisis here on the ground in Australia, as well as the borders staying open, are we going to see another property boom over the next few years in terms of Australian property prices? Now, my name's Luke, and I talk all things real estate, renovating, and financial freedom here on the channel. If you're looking for a Brisbane-based buyer's agent, head over to purposeproperty.com.au. Now, we need to take a look at Australia's property big picture. There's a lot of talk on YouTube and in forums around a super boom or a property cycle run of the ages. You know, the 18.6 year cycle's coming together, and therefore Brisbane and Melbourne are going to go through the roof and jump 20% a year. Now, I think we can all agree that 20% a year growth rates for property are not good for Australian society, and they're not realistically achievable year on year after year. We should expect property, in my opinion, to be more like 5 to 8%. And if you're outperforming the markets, 10 to 15%. But given that we are expecting multiple rate cuts, I know even there's some recent forecasts from NAB and Westpac that there's going to be a double cut. And if we see a double cut or multiple cuts in the next 12 months because of the global uncertainty, because of these trade wars, tariffs, economic trade with China and things like that, leading to the government making the decision, or the RBA cutting rates, which impacts everyone in terms of mortgages, because Australia is largely a variable environment compared to the USA, which is a fixed rate environment typically. That could mean that we see fuel tipped on Australia's property fire. And so with fuel being added to the fire and the supply crunch not being changed anytime soon, does this mean we're going to get double-digit growth in the next year or two? I think it's certainly feasible. And this is probably the scary thing for everyday Aussies who are wanting to try and break into the market. Now, there's lots of incentives and schemes and plans to get first home buyers in. They're giving grants for new homes, stamp duty concessions, 5% deposits, co-ownership schemes, first home super saver schemes. So look how many schemes and strategies and grants there are for people to potentially break into the market. Now, all these things are enabling people to get in, but they're not really reducing pressure on property prices. The thing for me that's a huge property fix would be supply. If we just dropped 100,000 homes and just were able to prefabricate new build homes that are 3-bed, 2-bath and plonk them on sites and get them all powered and connected, that would fix a lot of these issues. But a lot of the people don't want to live west of Brisbane, for example, an hour and a half from Brisbane. And they want to be in these urban areas that are built up, that are closer to the train lines, the schools and the shops and the city for work. And so this is the big issue, is that the in-demand areas around Brisbane, Sydney, Melbourne are all scarce. There's no more that can be built out. And this is where we see that crunch happening on the ground. In Brisbane, for example, you've got areas which are landlocked. New Farm's the biggest price, or Tenerife, biggest prices in Brisbane, but it's also true for the more affordable areas. These areas like I bought recently in Bundamba or Bray Park or Shayla Park. These suburbs are areas that were built in the 60s to 90s typically. They have existing infrastructure, schools and train lines and things like that, and there's overwhelming demand for this affordable price point. So I think the rate cuts are the spark, and the fuel is the global uncertainty. And then the squeeze that we're seeing is the supply crunch on the ground. And so we've got the spark, the fuel, and the squeeze all happening at once, therefore leading to a super boom or mega growth, or whatever you want to call it, double-digit potential growth across Australia's major cities and major markets. Now, this is a tough situation for a lot of people, but if you're investing and you're wanting to make good financial decisions for you and your family, and you can afford to buy an investment property and break into the market, don't go buy a new build in the sticks on a 200 to 400 square meter block. Go for the older, ugly home in a suburban area that meets these scarcity requirements. Look at the underlying data of days on market, of vacancy rates, of household incomes, of median price points and affordability, and make an investing decision based on the underlying data, as well as understanding the local market. And so it's that mix of quantitative and qualitative approach that can get you ahead and enable you to make a good quality decision moving forward. So we need to navigate this impending or whatever you want to call it, impending looming boom that could happen in Australia's property market. And the truth is, it's not fair. It's not fair that prices are growing so significantly, that we have such a supply shortage, that another million people are going to come into Australia in the next 12 to 24 months. Lots of things in life aren't fair, unfortunately. And so we have to walk this tightrope of taking and making good quality investment decisions now because of the future growth that Australia might have. Now, for me, I'm not making short-term investing decisions. A lot of people have been chasing the Perth market the last few years, and now they're chasing the Townsville market. And I'm hearing talk of people chasing the Darwin market, which is crazy to me. Because if enough buyers agents and there's enough commentary on YouTube about buying in Darwin and it's the next place to buy, it's got, heaps of established stock there that we can buy up and the prices will grow. I think that's a flash in the pan mentality. Do you think Darwin is going to be the place to buy over the next 7 to 10 years? That's the approach that I'm taking with my investing philosophy. So yes, there might be short-term growth in some of these markets. We've had the Perth boom, we've had the Townsville boom, which might have another year or two to go, and we're having the Darwin boom be the talk of the town at the moment on the YouTube and property space. For me, I don't fall to those booms and chasing those hotspots for 3 to 600K. I'd rather get a bit more capital together and buy in the major markets, buy in the Brisbanes, the Melbournes, the Sydneys, and then yes, buy regionally when it makes sense as part of your bigger investing philosophy. So I'm very Brisbane dominant, obviously being a Brisbane buyer's agent and a Brisbane property investor, spread across 4 of the 5 councils in Brisbane City. So I've got properties in Moreton Bay, Logan, Brisbane, and Ipswich at this point in time. And I'm actually, being fully transparent, probably going to look to buy in Melbourne in 1 to 2 years' time, because I think Melbourne's going to stay relatively stagnant the next year or two. And then I think it would be a good time to buy in Melbourne in around that 2027, 2028 timeframe. That's kind of what I'm looking at, 2027. And so in your own investing journey, looking at the spark, the fuel, and the squeeze on Australian property prices and the property market, can you make a more fundamental decision that's going to set your family up well for the next 7 to 10 years? Don't be a short-term day trader or year trader when it comes to property investing. Be a mid to long-term trader and make sound investing decisions. That's the philosophy that I've personally taken and has stood us well over the last decade. Now, it's crucial that you get this right, because when it goes wrong, it can go very, very wrong. I've seen people buy mining town properties, and I've seen them buy them for 7 to 800K and then drop to 3 to 400 grand off the back of a boom period and then a bust period. And those properties were overhyped. There was lack of long-term demand in those mining towns. And I saw people lose hundreds of thousands of dollars in their investing journey buying those types of assets. And so just be wary that there can be pullbacks and there can be retractions. And there are windows where property does go back 10 to 15%. It's happened here in Australia before. We've never seen more than 10 to 11% crashes across the major cities. But it is possible for property to go up, down, or sideways within that 10% range each year. But I can guarantee you one thing. If you sit on the sidelines right now and sit on your cash and sit on your borrowing capacity and do nothing, you will get nothing. Your money will be eroded away by inflation. So your $100 will be worth 98 and then 96 and then 94 year after year. And you're not going to be getting that compounding growth on a bigger asset base. And so you need to look to take action. Don't take 2-3 years to take the steps you need to keep moving forward. Sit down with a broker right, today if you need to do that. Book in with myself if you want to have a chat with a buyer's agent at purposeproperty.com.au. Get together the team of property managers and trusted advisors to help you along that journey. Build the team around you and take action. That doesn't necessarily mean buying a house today, but it's all those steps you need to do beforehand to get ready for your next step. For me, I bought a couple of properties in the last year and I'm working with builders on build contracts and I'm making sure I keep on top of them for the next step, signing contracts, for confirming quotes, for lining up the town planning and soil tests and things like that. And so make sure you're taking those next steps so you don't miss out on Australia's potential property boom or super boom that could be happening moving forward. I'd love to hear your thoughts in the comments below. What do you think about the rate cuts, which are the spark? What do you think about fuel on the fire, which is the global trade network and liquidity at the moment? And then what do you think about the squeeze in terms of the supply here in Australia's market? I'd love to hear your thoughts in the comments below. If you're looking for a Brisbane-based buyer's agent, head over to purposeproperty.com.au and click this video over here for more things on real estate, renovating, and financial freedom. I'll see you in the next one. Peace.